Welcome back to Market on Close. I'm Caroline Woods in for Oliver Rennick. Tempus AI, ticker symbol TEM, just reported its fourth quarter earnings. George Tsilis joins us now to break down the report. George, I was looking at the stock reaction, back into a pretty negative reaction here. It looks like maybe investors were changing their mind a bit, but looks like this one's just not cutting it. What's going on?
Yeah, off the top, if you just, consider, first off, the environment we're in, a lot of these AI companies that aren't some of the majors out there, like NVIDIA or Apple or whatnot, are not trading very well. And I think Tempus AI got caught up into this pullback that we've seen, and especially in the smaller cap names. Even though this company's market cap is over 10 billion, it's not a small cap. It just fits that same narrative of some of these selling we're seeing across the second tier level of technology firms. Palantir is included. HIMS, I haven't seen that report after hours, but that also got caught up in this pullback that we've seen over the past week. But nonetheless, very interesting company. It's a new company from an IPO standpoint. The company's been around since 2015, but this is essentially one of the leaders now in growing counterpart companies in the AI space, particularly when it comes down to applications for doctors and biotech companies and researchers using AI to help diagnose and, of course, find curative aspects using technologies like AI, and also to provide precision medicine and patient care. So this is a very interesting company technology-wise, but if you look at the pullback in the after hours, I think it fits the aspects of the earnings per share and sales, which if you look on the top of it, they actually published 18 cents of a loss on a per share basis. The estimates were 15 cents, so they actually missed the estimates by about 3 cents. And the other thing is, if you look at the sales estimates, which are around 206 million, they came in about 6 million shy at $200 million. These are just rounded figures, but nonetheless, that increase was about 35% compared to last year for the quarter, as well as the company did finalize their fiscal 24 numbers, where if you look at it overall, sales were in total about $693 million, up 30% for the full year. Now, they did report a loss for the entire year, about $700 million. Most of that, if you just look at the writing or the publishing of the data, they actually had about $550 million. These are approximations of stock-based compensation, because even though the company's been around since 2015, it recently IPO'd back in November of last year. So most of the losses that occurred last year were based on stock-based compensation, but for the quarter, they did denote a loss of 13 million on an adjusted basis, and last quarter was 50 million. So they are improving the losses per share when it comes down to the top line sales, which are still growing about 30%. And it looks like the last year, majority, again, major shareholders, which are early investors, or perhaps some of the insiders or even startup folks who were started up the business, did take advantage of the IPO and sold some shares. But I think this is an interesting company in the space for, research, clinical diagnostics for genomic testing and artificial intelligence. And right now, it seems to be one of the leaders in this particular space.
Okay. All right. Well, it looks like analysts were pretty split on this name heading into the report, although the median price target was $55 a share heading in. So we'll have to see what the analyst community says after. But right now, it looks like we're going to see some downside following this report. George Tsilis, thanks so much.